Canada's population shrank for 2 consecutive quarters for the first time in modern history. Fewer people means fewer buyers, fewer renters, and a housing market that's losing the one thing that kept it afloat. For decades, Canada's housing market had a guaranteed backstop: population growth. Even when prices got too high, even when interest rates rose, even when the economy slowed, there were always more people arriving than leaving. That demand kept prices elevated and kept the entire system running. That backstop just disappeared. In the fourth quarter of 2025 and the first quarter of 2026, Canada's population actually declined. International immigration, which peaked at over 1 million new permanent residents in a single year, collapsed to roughly 53,000 in one quarter. At the same time, more Canadians died than were born. And interprovincial migration shifted dramatically, with Ontario and BC losing tens of thousands, while Alberta and the Prairies gained. The impact on housing is already showing up in the data. Toronto condo prices dropped over 9% year over year. Nearly 4,000 completed units sit unsold. Rent in Toronto fell for 29 consecutive months. Vacancy rates in Vancouver hit their highest level in over 30 years. These aren't random market fluctuations. They're the direct result of fewer people needing fewer homes. Here's how the chain reaction works. Fewer immigrants means fewer renters in the short term. International students and temporary workers were the primary demand driver for basement suites and shared housing. When their numbers dropped, landlords lost tenants. Rental income disappeared. Vacancy climbed. In Brampton, where basement rental income was covering a significant portion of household mortgage payments, the loss of student tenants pushed homeowners toward delinquency. Fewer renters means downward pressure on rents. National asking rents have been falling for over a year. Lower rents make owning an investment property less attractive because the rental income no longer covers carrying costs. That pushes investors to sell. More investors selling means more supply on the market. Toronto already has record condo listings. Every investor who lists a unit adds to the oversupply that's dragging prices down. Falling prices reduce homeowner equity. Homeowners who bought at peak with minimum down payments are now in negative equity. They can't refinance. They can't sell without owing the bank money. Some stop paying. Delinquency rates climb, and the cycle continues. But here's what most people miss. The population decline isn't uniform across the country. Ontario and BC are shrinking. Alberta, Saskatchewan, and Atlantic Canada are growing. That creates a two-speed housing market. In Ontario and BC, the population loss accelerates the correction. More listings, fewer buyers, prices continue to fall. In Alberta and Saskatchewan, the migration inflow tightens supply. Fewer listings, more competition. Prices continue to rise. CMHC's data shows this divergence clearly. Ontario has over 5 months of supply. Buyer's market. Alberta has under 3 months. Seller's market. Saskatchewan has 1.6 months. The tightest in the country. The population decline also affects new construction. Developers build homes based on projected demand. When the population was growing by 400,000 per year, the math supported aggressive construction. Now that the population is shrinking, developers are pulling back. Projects delayed. Permits deferred. StatCan already cited construction weakness as a driver of GDP decline. Fewer homes built today means tighter supply in 3 to 5 years when the population potentially recovers. The government faces a dilemma. Restarting immigration at pre-2024 levels would stabilize housing demand and support prices. But public opinion has turned sharply against high immigration. The political cost of increasing immigration now is higher than the economic cost of letting the population shrink. So the housing market is on its own. No population growth backstop. No immigration surge coming. And an economy in technical recession. The cities that thrive in this environment are the ones attracting Canadians from other provinces. Edmonton gained over 11,000 interprovincial migrants in a single year. Calgary gained 26,000. Saskatoon hit record prices. These cities don't need international immigration to grow. They're growing from domestic demand. The cities that struggle are the ones that depended on international arrivals. Toronto, Vancouver, Brampton, Markham. Without the steady flow of new residents, these markets have no floor under demand. And without a floor, prices keep searching for one. Is population decline a bigger threat to housing than interest rates? Drop your take in the comments.